Good afternoon, everybody, and welcome to the first Code of Conduct webinar for 2018. My name's Beth. I'm from the Learning and Innovation team. And what I'm hoping you'll all do for me is let me know how the sound is at your end and if it's a little bit crackly or if it's okay. There's a bit of a delay at our end, so it's perfect. Great. Thanks, Daniel. Fantastic. Thanks, Anna Rosa. Okay, guys, looks like we're all right to proceed. So our presentation today will be from Paul, who is part of our code and standards team. I think we'll go for around 40 to 50 minutes, maybe a little bit longer. And I think at this point we'll be taking questions after the fact. Just to let you know as well that this recording will be available in around 7 to 10 days, and I'll hopefully be able to send that link around to you all, and it'll pop up on the ACFID channel. All right, so without further ado, I'll hand you over to Paul. Thanks, everyone.
Thank you, Beth. Good afternoon, everybody. Yep, it's Paul here from the Effectiveness and I forgot what engagement team in ACFID, and we pretty much look after the code of conduct from an ACFID perspective. Look, today's session, I hope to get you across the requirements of the new code, and also we've had a look at a small number of annual reports and financial statements that have been reported under the new code so far. So just picking up on some sort of issues and trends, I suppose, we're seeing there, which might help you when you come to do yours. Sorry, I'm just running my first glitch about moving the, so I'm just trying to change slides here. Which it's not working. There we go. Nope. Oh no. Sorry about this. A small technical glitch. We've got to get the slides back. Thank you, Beth. I'll see if we can do it again in a minute. Yeah, code of conduct. As you can, hopefully most of you are aware that the new code came into effect on 1 June 2017, so it's almost up for its first anniversary. And all the reporting that you'll do now is under the new code. There are some changes, and at face value, probably some of the reporting we've seen so far, there's a bit of evidence to say that maybe some of our members aren't aware of all the changes that were made. And we'll also go through those a bit later in the session. Got it that time. Thanks, Beth. So in a nutshell, the new code came in 1 June. Just briefly, it's more succinct than the previous code. The quality assurance framework where all the detail is kept is more prescriptive and descriptive than the previous code. So hopefully you find it is clearer. Hopefully you find that maybe the reporting burden's been reduced, probably not so much around annual reporting and financial reporting. There's a bit of streamlining of some of the financial reporting requirements compared to last time, but pretty much sort of still fairly similar. Compliance self-assessments, on the other hand, only have to be done once every 3 years, as distinct from annually as they were before. And hopefully the new code, well, it's been updated to reflect changes in practice over the last few years and also aligned with some of the other standards around the place, particularly the global standards. As mentioned before, the code is supported by the Quality Assurance Framework, which you can find up on our website under Read the Code. That's where all the detail is down at the detail level, which sets out the evidence you need to gather to comply with the code. And we've also got the Good Practice Toolkit, which provides more guidance at a more detailed level. It also includes a number of resources for you. So I'm just trying to change the slide again, and obviously failing. Okay, got it. I think I found the right button. this is just the structure of the new code. So there's 9 quality principles, and most of the all the financial reporting and annual reporting requirements live in quality principle 8, which is about resource management and basically managing our resources ethically and responsibly. So I won't dwell too much on that. So compliance with the code, as I mentioned before, compliance self-assessments are only required once every 3 years. That might not concern too many of you. I suppose really the code is still really largely self-regulatory on your part. We do some checks, as I say, compliance self-assessment once every 3 years. On the other 2 years, required to send in an exceptions report, which says that you can, well, there's a statement to say you're compliant with the code, except for any particular areas we've identified where you're not, which we require to be disclosed, and a bit of a, I suppose, a indication of what you intend to do to get back on track. As far as annual reporting and financial reporting goes, that's still an annual process. We want them submitted each year at the end of it. The rules are pretty much the same as they were previously. We need them in within 5 months of the end of your financial year. So for those of you reporting up with the year end of the 31st of December, have got to the 30th of May to get them in. Importantly, if it looks like you're going to be delayed or held up, please get in touch with us as soon as you know, and then we can sort of come to some arrangement to either an extension or help you out with whatever the problem might be. Around compliance, under the new code, there's no, you're either compliant or you're not. There's no, I suppose, qualified compliance as such. There's no, got the word for them now. I think we had some indicators or some requirements in the new code that were more progressive, where you could be working towards them. So we don't have those anymore either. So you need to be compliant with all the requirements of the code, or you won't be compliant, I suppose is what I'm trying to say there. So with the financial and annual reporting requirements, you need to meet all the requirements that are set out in the code to be compliant. However, having said that, given it's a new code, we've got a 3-year transition period, and it is our intent to use those 3 years to get all our members up to a standard where they're compliant with the code. So over the next 3 years, our aim is to work with you and provide the tools, the materials and the resources you need to be fully compliant in the not too distant future if you're not already, and onwards. All the reporting now is done through the compliance portal. We're trying to work towards that under the previous code, but I think we still had some members who were emailing things in or doing it in other ways. But now, yeah, we need everything through the compliance portal. So if you're not already registered, get in touch with us, and we can set you up to be on the compliance portal. Also, all members have generally got someone who's set up as an administrator of the compliance portal, and they can also get people going up the compliance portal if you're not don't already have access. For the annual reporting and financial statements, once you're in the portal, it'll look something like what you see on the screen there, and it's just a case of clicking on that annual reporting and financial statements tile and loading up your documents into the portal. One reason I say it's important to use the portal is we've got a number of, I suppose we've upgraded our systems, so we have a number of automatic processes that kick off. We've got a reminder process just before of reminders that'll go out a couple of weeks before your reporting is due, just to remind you that it is coming up. And then if you don't submit on time, we've got a graduated series of reminders as well that will keep tuning out with ever increasing nastiness, I suppose. to a point where, you know, if you don't report, then we'll be referring you off to the Code of Conduct Committee, but hopefully we won't have anyone in that situation. So if you don't report through the portal, those processes will just will continue on. So that's why we need you to report. One reason we need you to report in the portal is basically just to, so you don't get any unintended consequences, I suppose, coming out of some of those reminder and compliance processes in the portal. Having said that, we've this is the first time we're using the portal. We've just used it for June 30th reporting, and we're still, I suppose it's still fair to say, we're bedding down a few issues as well. So if you're using the portal and you've got anything's not working or doesn't look right, please don't hesitate to get in touch with us, because it's probably an indication that something isn't quite going according to plan, and then we can jump on and get it fixed up. There have been a few issues. Oops, I'll just go back. On the screen here, once you get into that tile that I showed you on the previous screen, this is what the annual reporting and audited financial statements page looks like, and it's just a case, as you can say, linking up to the documents, attaching them up, and hitting on the Add Document button, and hopefully they should load up and then be available to us. One issue that we have come up with is that there's a 10 megabyte limit on the attachments that you can load up, and we've had a few members who've had annual reports that are bigger than that, and it's caused them a few issues. How they and we've got around that is, in one case, the member split their annual report into two and submitted two separate files that were each under 10 megabytes, so they could get on. We've also recommended that you have a go at some of the free file compression software around the place, and I've got a couple of links there on the slide to those utilities. So that might be able to get you down under the 10 megabyte limit. Look, and another way you can do it is just actually load a Word document or something up just with a hyperlink to the annual report on your website if it's there, and then we can just sort of grab it that way. But any of those, just getting something up on the system there will ensure that we've got you registered as having submitted something, and we'll stop reminders and those sort of things going out after that. Look, I'll just quickly, for those of you who haven't seen the quality assurance framework and the code, even though this isn't a financial reporting requirement, I'd probably just worth giving you a look just to make sure you can navigate your way around there, and if you do get into it. So if you get into, in our case, it would be around about 8.3.2, I think, for annual reporting. As you can see, that on the top of the page is the quality principle, which in this case is about participation, empowerment, and local ownership. In that blue box in the right-hand column, sorry, the left-hand column, I'll get my rights and left right, you can see the commitment, which is about promoting the participation of primary stakeholders. Then there's a bunch of compliance indicators next to that, and they're the things that you need to comply with. And then towards the right is some items called verifiers, and they set out the evidence that we will be looking for you to produce or talk about to show that you are complying with those compliance indicators. And down the bottom we have some good practice indicators as well, which are not mandatory. We sort of monitor how members are going towards meeting those, but you don't need to comply with those to be compliant with the code. They're more aspirational, I suppose, objectives or practices, which are sort of flagging where we're heading to in the future to try and lift everybody's practice. We'll go into some of these around the financial stuff shortly. Well, how about now? So this is the annual reporting one. So as you can see, we've got 8 resource management, which is the quality principle. The commitment is we report on the acquisition and use of our resources. The compliance indicator is you must publish an annual report. And then there's a whole bunch of stuff there in the verifiers that we are looking for in the annual report. This is under the new code. It looks much the same as what you would have needed to have done under the previous code. So we basically still need a description of your purposes, objectives, aims and values. We need a description of your most significant aid and development activities and their impact. Got some information about evaluations into effectiveness and your learnings. Reports by the management and the governing body, in a plain language summary of income expenditure and your financial health, and a statement of commitment to adherence to the code. A couple of things that we no longer require are information about complaints. The previous code, you had to put some information about how someone can make a complaint against your organisation and how they can make a complaint against the code of conduct. That has to be on your website, but it doesn't have to be in the annual report anymore. Although I think most annual reports I've seen so far have still got the complaints information in there, which is no problem, just over complying. You can add more in, these set out the minimum standards. I've got a couple of areas there which are probably ones where I suppose we're trying to lift the standard. And probably under the previous code, a lot of members struggled with the reporting in those areas or was just absent. I think it's fair to say I'm seeing an improvement in all that this year, at least in the few that I've looked at. So that looks to be good, but I'll just go into those a bit more detail anyway, because I think it's an area still where there's a lot of areas where there's a lot of improvement that could be made. So the first one I really want to talk about is the description of the most significant aid and development activities and their impact. Look, I think most of you are pretty good at setting out what you're doing and basically setting out what your activities are during the year, and I suppose what your outputs are in so much as, you know, you've opened a school, run a residential care program for children, or whatever the case may be. So I think pretty good to that level. Probably where we're not so good at, and I think there can be improvement, is actually describing the impacts of that work. So the example I've got there is, you know, we're pretty good at saying we drilled 20 wells, and often reporting stops there. So it'd be good to go a bit further and go into the so what's around, well, so what about drilling 20 wells? So we improved the lives of 1,000 people because they had access to clean drinking water, so that's good. Is there anything else? So what? Well, that's also gone on to lower the incidence of waterborne disease. Our animals are healthier, so there's no disease there. Children are being able to go to school instead of being homesick. So there's a whole sort of bunch of other impacts that can come out of that. And eventually, you know, it could be things like reducing the infant mortality rate, getting better health outcomes. Women, you know, are being freed up to do other things rather than walk, you know, 5 kilometres each way to the nearest water supply, etc., etc. So it's sort of trying to take it and explain how what you're doing is making people's lives better and how, you know, it's improving to their development. Also, probably the other thing to look at there is how do those activities relate to your, I suppose, more strategic goals and objectives? How do they contribute? So it's often good to see a line of sight between what your activities are, how they might contribute to, say, some sort of intermediate outcome, which might be we drilled a bunch of wells, we gave access to water to 1,000 people, and then you might have a higher goal, which might be, you know, we're really trying to improve health outcomes for the population, and then you can show how that activity links up to that, and that's what you're doing is leading to that outcome. suppose the other thing I've been seeing around, excuse me, around this one is that there's been people are quite good at giving a narrative explanation of their impacts as well. But where you can, it's would really strengthen the reporting if you can put some quantitative information in there as well about how many. Again, a lot of the reporting is good at saying we've drilled 20 wells and we did that in 4 different villages, so it's good at explaining the reach of your work. But sort of taking that extra step and saying, well, that has gone on to give access to water of 1,000 people, and that's the got information from the health authorities that the level of I don't know waterborne diseases has started reducing and that sort of thing. So if you can sort of tie things into those sort of outcomes and put some numbers around it, that makes the reporting a lot stronger. And probably not seeing a lot of that so far. Let's see what else I have to say about that. So I think, yeah, one good technique of doing that is just asking "so what" a few times till you get to a "so what" where you can't answer it. And I appreciate that, projects are at different life stages of their lives. Sometimes quantitative information and studies aren't available. So it's just actually doing that as far along the chain as you can. So you might only get to the point where you've got some intermediate outcomes that you might be able to report on from an impact perspective. And if that's the best you can do, that's fine. And but it's next time around you might be able to go a bit further. So hopefully that sort of makes some sense as to what we're sort of looking for around this area, just more than inputs and outputs, but you're going a bit further into impacts and demonstrating how improving the lives of people, what you develop, how it contributes to development outcomes. The next one, which again probably was a fairly high area of non-compliance previously, was having information about evaluations into the effectiveness of and the learning from aid and development activity that you might do. The intent behind this one is really around continuous improvement. It's about showing how you're learning from what you do, how you're adapting your activities or taking advantage of those learnings and putting them into practice into the future. And doing that, to come up with some more effective, to be more effective in achieving your development outcomes. So you don't actually need to have done a formal evaluation to comment on this. It could be learnings from any source. It could be from monitoring, could be from reflection, could be just from the experience of doing, could be from things that have gone wrong, could be things that have gone really well. So it probably doesn't really matter where the learnings are from, and these could be at a project level, they could be at a whole of organisational level as well. What I'm seeing, I suppose, in recent reports that I've looked at, is that there's generally elements of this in the reporting, insofar as that reporting covers, some of the reporting I've seen has basically said, next year we're going to do X, Y, and Z, which is different than what we did this year. So implicit in that is that there's been some learnings and there's been some thinking. Plans have been changed or adapted to take account of those learnings, and things move on from there. What's probably not in the reports, and as I said, what's implied, is what the learnings actually are. So that's usually not overt. Yeah, it would be good if they could be drawn out. So the sort of things that we'd probably tend to be looking for, that could be things like, what are the critical success factors in your work or behind a project? What made it? You had really good results. What really created those results? I think just one example I've seen recently was a school which got really good good results compared to other schools that the organisation ran. And the difference was that they found was in that particular school they had a quite a wide and varying curriculum. They gave students choice, and students could choose what they studied, where in the other schools they couldn't. There was no choice. It was a set curriculum. So the lesson from that is, they'll be looking at rolling that out into the other schools to hopefully improve the results there. So that's just a sort of, I suppose, a small example of the sort of thing that could be mentioned under this to meet this reporting requirement here. And probably, sort of a technique, I suppose, for doing that is with your contributors, you could probably ask them, just give a couple of examples of things that went well, things that maybe didn't go so well, and why. And you can get a couple of those from each of your contributors. Some of them, there might be a pattern that might develop. It could be you might just want to choose a couple of the most interesting ones or the most important ones to report on. There might be a couple that you really want to grab and the lessons and expand out to the rest of the organisation, and so that'll be the sort of things to sort of think about there. As I mentioned, you can sort of certainly pick up on things that didn't go so well as too. So I think that the issue is there not to be scared of reporting on things that maybe didn't go so well. The important thing there is to actually just identify those things that were behind it not going so well, and then identify how you're adapting to that, whether you're sort of changing your strategy, changing what you do, bailing out altogether, whatever the case may be. But then that's just still showing that you're learning, that you're adapting, and showing that you're looking to improve and become more effective, even if it does mean that there's some things you might not do in the future. So hopefully that gives a bit of a flavour as to what we're looking for and under that criteria. As I say, in a lot of the reports I've seen, there's elements of that there. Just a lot of it's not overt, and you've got to go looking for it. But that's my problem, not yours. As long as it's there, that's good. And that is an area, as I said, yours, as long as it's there, that's good. And that is an area, as I said, we're seeing some improvements compared to previous years. Financial, a plain language summary of income and expenditure and overall financial health. Again, was an item that was frequently missing from annual reports. The few that I've seen this year, been great, been covered in all of them. They've had either had a bit of a narrative, giving a plain language explanation of their financial reporting. Sometimes it's in charts or graphs. Doesn't really matter how it's presented. It can be a mix of all those, and often it is, as long as it's there. I think one thing to look out for though, if you're just doing it pictorially in graphics or charts, is to include some sort of, I suppose, summary statement conclusion just about your financial health, which might have to be a bit of a narrative, which could be really saying that things are going well, or one I just read, things aren't going so well with the fundraising, but here's what we're going to do about it. We're going to get in a marketing person and put more focus on our fundraising in the next year. We're also going to put on getting DFAT funding, etc., etc. As mentioned in the slide, this part too doesn't have to be a long or complex summary of your financial health. The important thing is it just needs to be understood by somebody who might not be financially literate. I think that's the whole aim. So if you're just talking to somebody, how would you explain what your financial performance is during the year? Pretty much is the way to sort of look at this one. And I think this is sort of an area of reporting that maybe could become more prominent into the future, not just from our perspective, but from some of the other regulators. I think, reading some of the accounting standards reviews and that sort of stuff that's happening at the moment, there's some thoughts about getting away from some more of the more pure traditional financial reporting into reporting that better meets the needs of users of annual reports of not-for-profits who don't tend to be that financially literate. So I think you might see a bit more focus on how to present things in a way that's not just a bunch of income statements and balance sheets. So that's probably all I had to say about the annual reporting narrative side of the reporting. So that's the annual reporting and really that more narrative part of the reporting. And probably now look to get into the actual finances or the financial reporting requirements of the code. As you can see there, it's still under Quality Principle 8, Resource Management, and it's under Commitment 8.3, which is all about reporting on the acquisition and use of our resources. And then we've got one compliance indicator, which is members publish code compliant financial statements and annual reports. And very important to remember that actually does mean they've got to be in your annual reports and not somewhere else, which still sometimes happens. We get annual reports that don't have financial information in them. And that's a big problem because it's very difficult to go back and fix up an annual report after it's been published. Much better to do it get it right up front. The other thing I occasionally see too is there might be financial information in the annual report, but it won't be code compliant. It'll be in some other format. And often you might find then that the code compliant reporting is actually reported elsewhere, which might be in the audited financial statements, but not actually in the annual report. So yes, sometimes these things get a bit confused. So yeah, just really make sure you get the code compliant annual reports in the annual report. And also remember that there's got to be an audit report that relates to those code compliant financial statements attached to that annual reporting as well, and that audit report also needs to be in the annual report as well. So we're looking for the code compliance financial statements, which includes an annual report, an audit report of those financial statements. I think sometimes too stuff gets truncated down where there's space pressures on annual reporting. So just sort of be aware that people don't make a few editorial decisions and chop a few bits out, even though you might think they're all going in there. Okay, financial reporting in a bit more detail. So like the previous code, there's a couple of options. Well, sort of options. Probably for members with a aid and development revenue of below $250,000 a year have an option to report in the option 1 format or the option 2 format. For those of you who have international aid and development revenue of $250,000 a year, you don't actually have an option. You've got to report under the option 2 format. Now, it is possible for you to be a larger organisation who only does a little bit of international aid and development to report under the option 1 format. So you could have total revenue of a few $1 million, but you might do a little bit of international aid and development revenue work where the total revenue is less than $250,000. You still can then report under the option 1 format because we're only looking at that international aid and development revenue, not your total revenue. So what does reporting under the option 1 format mean? Pretty simple, really. All we need from you to report is to be code compliant is an income statement in the option 1 format, which looks something like this. And that looks probably fairly similar to what it did under the previous code with a few extra items thrown in. So to reflect some of the more recent trends in fundraising, we've got a couple of new items in there around commercial activities income and commercial activities expenditure. So they really are looking at getting you to report separately on any income and expenditure that relates to, I suppose, fundraising activities where there's some sort of exchange of economic value rather than just pure donations or grants. So we're looking at things like where you're running a shop, an op shop or a fair trade shop, could be selling things online, could be running raffles. I think some people, might run trips overseas where people pay for, I suppose, an overseas trip, and part of the price of that money goes towards development work. Also, the trip might also indicate undertaking some charitable activities while you're overseas as well. So it's those sort of things where there's an exchange of economic value. It's not just a pure, I suppose, donation as such. There's another item there called other expenditure, which was missing from the previous version of the income statement under the previous code, and that's really just to pick up anything that doesn't fit under another category. And I say doesn't fit under another category with some seriousness. It doesn't mean that you can move things from other categories that better fit under other categories into other expenditure. So if you've got administration expenses that are administration expenses, like could be office rent, IT expenses, that sort of thing, they should stay under administration expenses. You can't move them out and put them under other expenditure. And the definitions that are in the back of the quality assurance framework, the financial definitions give you a pretty good guide as to what goes under each of those categories. And you can also find those in the good practice toolkit as well. I think probably some examples of things that go under other expenditures were things like realised gains and losses on currency movements and that sort of stuff, where they weren't done for a sort of a commercial fundraising sort of purpose. They're just sort of an incidental part of doing business. That's probably about the only thing I can think of that I've seen recently that's gone under that. We have put up just recently some, well, actually yesterday, some questions and answers on the good practice toolkit in the resources section under 8.3. Just on a few of those sort of classification type questions that have been asked recently by members. There's probably about half a dozen questions there. I'll probably give you an idea of some of the principles that we're looking to apply around how things are classified. So hopefully they'll be fairly clear cut. But as I say, pretty much along the line, if you can fit things under one of those other categories, they don't go under other expenditure. Probably the other, sorry, I'm just lost my place now. I think that's pretty much covered it. So probably the other thing I should mention under option 1 is that there's no need any longer to do a table of cash movements, even though most annual reports are still reporting tables of cash movements, so there's nothing wrong with doing that if you want to, but from a code compliance perspective, we no longer require them. The other thing, I suppose the other change there is that if you have nil balances for one of those items in the year of reporting and for the previous year, we used to make you report nil balances for those items and disclose them in the report, in the income statement, or alternatively, you had to put them as a note if you didn't want to put them in the income statement. Now you have a third option of just not disclosing them whatsoever. That previously was a fairly big area of non-compliance, so I'm glad we've made that change. And really, that's because it wasn't sort of really adding a lot of benefit to the pain it was causing. Oops, sorry, I'll just try and hit the next slide. Moving on to option 2, for those with international aid and development revenue of $250,000 or more, slightly more complicated or longer income statement is required. So need to disclose all those items as minimum, except for where there's nil balances, as I mentioned. Again, the same new items are in there. So pretty much the same applies for those. But really quite similar to what you would have seen before. Now, under option 2, you also need to do a balance sheet. There has been a change here. Previously, we had a balance sheet template, which we required you to disclose all the items in that template. We've now given you a lot more flexibility by saying all that your balance sheet needs to do now is comply with accounting standard AASB 101, presentation of accounting. Sorry, it shouldn't say accounting standards, it should say presentation of I've forgotten actually what it is now, financial accounts or financial reports, I think, or something along those lines. Sorry, that's a bit of an error in that that slide. Paras 54 to 80 are the relevant bits to look at in there. But really, I suppose if you've got a balance sheet that gets through your auditors, then you're pretty much home and hosed on that one, I think. You can still use the template that we had previously, and if you use that template, you will certainly be complying with AASB 101. And that template looks something like this. So if you use that again, disclose all those items, you won't have a problem complying. Again, the nil balance requirements sort of apply there. That's essentially, you can, if you have nil balances for any of those items for the reporting year and the previous year, you can choose not to disclose those items if you wish, or you can disclose them as nil balances if you like, or you can put them in a note. Up to you. Now, probably going back a bit to the income statement as well. Sorry, I should have mentioned this previously. Probably one thing to look out for is if you've got non-monetary expenditure. Non-monetary revenue, say from, you want to include a value for your volunteer labour, or you get gifts in kind. Please make sure you offset that by the same amount of non-monetary expenditure. Occasionally we see that those things don't line up, and the impact of that is that will distort your end result, either hopefully unintentionally, but yeah, so that it probably may not provide a true picture of where you're actually at in monetary terms. So I think that's about all I have to say on that one. So we'll get this right eventually. Just bear with me for a sec. Gotcha. Okay. Option 2, still on option 2. If you're a company or you're a trustee company, you'll need to do a statement of changes in equity, which you would have had to do in the past. So the requirements are pretty much the same as they have been previously. Got a bit of flexibility around format, and here on the slide is an example of the complying format. So if you did one look like that, you won't have a problem. But again, no change from practice under the previous code. Probably one thing to look out for is just make sure that the balances in your statement changes in equity also match up with the equity totals in your balance sheet. Sometimes they don't, or sometimes it's a bit of a convoluted process to work that out. But yeah, just make sure that happens, and that would be good. Oops, again, sorry. As mentioned before, table of cash movements was a requirement under the previous code, but no longer a requirement for either option 1 or option 2 under this code. So those of you who are reporting tables of cash movements, thanks very much. You might have other reasons for doing so, but if you don't have to do it if you don't want it. And as I said, it's been quite surprising. I thought that would have been the first thing to go based on member feedback, but I think most of the financial reporting I've been looking at still has the table of cash movements in there. So maybe that message hasn't quite got out to everybody yet. Nil transactions, we talked about that. 3 options. Include them as 0 balances. Don't disclose them, but you can put them in a footnote or just choose not to disclose them at all. The thing to watch out therefore is that's got to be nil balance for the reporting year and the previous year for comparative purposes. So if you still had a balance for one item in the previous year because you've got to report 2 years in your financial statements, you still have to disclose that in your financial statements. Oh, right, yeah, I just wondered if that was the next one I was looking at. Governing body declaration. Most larger organisations have to do a governing body declaration under ACNC, and that would be normally be part of their audited financial statements, or that would be where it would be located. But we need one from all members, so you might be a smaller member who doesn't have to do a responsible person's declaration, which is probably the same thing under ACNC law. But you'll need to do one for code purposes, and that would normally live in your full audited financial statements. And we'd recommend that you just use the same format that would be required by the ACNC legislation. The governing body declaration or responsible persons declaration, we don't need to see that in the annual report. That can be provided, as I say, separately, but would typically be part of the audited financial statements, and as long as it's in there, then we're happy with that. You can put it in your annual report if you're putting your full financial statements in your annual report, and that's part of it. Not a problem either. And this is what the ACNC responsible persons declaration looks like. So if you're a small organisation that doesn't have to do this for the ACNC, that's the sort of thing we'd be looking for you to have signed off and produce for us in your basically as part of your full financial statements. So really, essentially looking at those sort of statements that you can pay your debts and that you're satisfying the requirements of the relevant legislation. Fundraising and administration expenses. This is probably, I would say, maybe a developing area of non-compliance, I think, from what I've seen recently. So there's a couple of elements here. One is fundraising expenses. So yes, please make sure that you disclose your costs of public fundraising in your income statement. If you don't, you'll probably get a please explain from us around that, because that's something we'd expect to see. Now, I appreciate there are a few members that will genuinely not have any public fundraising costs, maybe because they don't do any public fundraising. Some examples are, I think we've got a couple of members who are essentially the charitable arm of other corporations, so they get all their income as just a one-off grant from that corporation, and they don't have to do anything to go and get that. That just sort of happens automatically. And we might have, occasionally we have members too who might have a guaranteed income for 2 or 3 years through other grants and that sort of thing, who don't actually have to go and seek any fundraising for a period. So if you're in that situation, it's usually probably I think would be good practice just to put a bit of a note in the income statement just to explain that no fundraising expenses because of blah blah, and that'll make it clear for readers and clear for us as well. The other one that we're seeing at the moment is around the use of ratios, charts, graphs, particularly where you've got a fundraising ratio in there, or you've got a some sort of administration cost ratio, you know, administrative costs to X% of your total expenditure. You know, all the view is showing that, you know, most of your money goes towards aid and development and trying to minimise the amount that goes to that's going to admin costs, or trying to show what that amount is fairly small. So really the code is just trying to really make sure that what's being disclosed in ratios, charts or graphs is truthful and is honest, and I suppose is comparable with other organisations as well. Probably the other thing behind that too is really no organisation can run without incurring some sort of administration cost. Well, it'd be very rare that they would do so. So part of that is just educating donors and probably the community in general that administration costs and fundraising costs are a necessary part of running your organisation, a necessary part of running any, I suppose, not-for-profit organisation and probably any business. You've got to have them. And so there's a bit of an education function there as well. So the code requires members to use the code's financial definitions when putting together financial ratios, or these financial ratios, and it also requires any use of financial ratios, whether they be charts, graphs, percentages, whatever they may be, to be accompanied by an explanation as to how they were calculated. That explanation could be something as simple as you know, this ratio is admin expenses over total expenses, something like that. And then, you know, hopefully there would be figures that would have come out of your financial reporting. Probably if they are something different, it probably would be good to explain that they are something different, although they still have to comply, of course, with the ACFID financial definitions as well. So probably most of the financial ratios and charts and graphs that I've seen lately haven't had the notes or explanations with them. So yeah, so I think that seems to me to be probably a developing area of non-compliance. So yeah, just watch that one and make sure you've got them. And that sort of would be to anything that you put in your annual report. That also covers things that ratios and charts and graphs that you might put up on your website and sort of publish elsewhere as well. So anytime you use those, we need to have them explained. Now, the Good Practice Toolkit at 8.3.3 has a fairly good explanation about the requirements here, so I'd refer you to that as a good reference to start with. I think that pretty much covers that one. As mentioned before, the quality. As mentioned before, the quality assurance framework to the Code of Conduct covers a bunch of good practice indicators, and these are what they look like. Probably won't go through them all. You don't need to comply with these. We just do get you to report on them in the compliance self-assessment as to whether you're meeting them or just working towards them or achieving them. I'll also do when I'm actually assessing your annual financial reports, and I might have neglected to say don't assess your annual financial reports every year. I will assess them. We'll assess them on the same year you do a compliance self-assessment. So we sort of do a full assessment of all your reporting in one go every 3 years. So we'll have a look at those and get some sort of make some sort of judgment as to how you're working towards those as well. And really that just I suppose gives us an indication as to where the standards are lifting. Also gives us some indication where we might need to provide some more resources, some more guidance, some more help, run more training, whatever the case may be. Help you, I suppose, improve practice in particular areas. As I say, you don't need to be with these to be non-compliant, but they probably indicate the direction where we're trying to push your practice, not just in financial reporting, but across a whole range of things in the code. So that's something to sort of look at and maybe treat as a bit of an aspirational target. And look, in the few bits of reporting I've seen recently, most members are hitting on some of those. Probably the ones we don't see so much of at the moment are environmental reporting, risk management reporting. Maybe some of the stuff on outcomes is a bit patchy, as well as mentioned previously. Probably around sources and sustainability of different types of funding is often mentioned, in particularly around in financial summaries. Anyway, something just to bear in mind. One thing I do need to point out is audit reports. As mentioned before, your reporting that goes in the annual report needs to be accompanied with an audit report. Now, you might have summary code compliant reporting in your annual report. So the audit report needs to specifically refer to that reporting. You can't pick up the auditor's report that might be for your fully audited financial statements and drop it in and apply that to your code compliant reports, because they've been done for different purposes. So you'll need to have your code compliance reports, if they're different from your full financial statements, separately audited, and a separate audit report done and published for them. So that could mean if you're reporting code compliant and full financial statements separately, that you might need to do 2 audit reports. If you're doing your full financial statements in you're just including all of that in your annual report, then obviously you'll just need to have 1 audit report that'll cover off both, assuming your full financial statements are code compliant as well. The other thing I just want to point out about audit reports is please make sure they're legible. Often we see, usually I think for space reasons, they're just sort of squeezed into the annual report and you can't actually read them, and then you try to blow them up on the screen and they just go into a blurry mess and you can't read it either. And sometimes we also see the name of the auditor, signatures, your identity and qualifications and contact details, which are all required to be included by the Code of Conduct. We sometimes see them cropped out or dropped off because they might be on a letterhead or down the bottom of the report, and so they're sort of chopped off as well. And they all need to be there and they all need to be legible for your reporting to be compliant. So they're just some things to watch out for, particularly when things get into the editorial hands, I suppose, of whoever's doing the annual reporting. Look, I just want to quickly talk a bit about financial wrongdoing. So I'm probably moving a bit away from the annual and financial reporting requirements now into some other parts of the code that do touch on financial reporting. And the reason I say that is because that's a focus area for this, for ACFID over the next 3 years in the Code of Conduct Committee, and we're calling in policies around financial wrongdoing, which I don't know whether you'll be involved with or not, but they do get into things like, what are your policies concerning corruption, fraud, counterterrorism, and financing and anti-money laundering and that sort of thing. And they do sort of then sort of flow back into your internal financial controls and things like processes you might have with partners for them to acquit their expenditure, and also upfront, particularly with money laundering, how you treat getting unexplained donations and that sort of stuff that may have other purposes behind them. So just be aware that we're calling in those policies. At this stage, I haven't really had a chance to look at a lot around that. Essentially, hopefully, it's really just after those things are in the verifier part of the screen that you see at the moment, which is over the right-hand side. So just we're after stuff about risk management, after policies or documents or whatever the case, whatever you might have in place that set out your organisational attitude towards financial wrongdoing and set the standards for behaviour in your organisation. We're looking for some evidence that you do checks against the various terrorist listings and sanctions listings, and also, which might be relevant to you, is some evidence that you've got appropriate and effective internal controls in place to manage risks around financial wrongdoing, which get into accounting systems and all that sort of stuff as well. It's a bit hard to prescribe exactly what we're looking for here, and so it's pretty much looking at seeing what people are giving us at the moment. There has been a bit of, I suppose, concern or a lot of questions from smaller members asking what we're looking for around a lot of these policies and things that we're asking for. And we do take into account the size of members and the nature of work and the risks involved. So we certainly wouldn't be expecting, a small member with who might be an option 1 reportee to have the same level of documentation as, say, a World Vision or a Red Cross or something like that. So there's a bit horses for courses. It's a bit hard to describe because there's different risks and different. Every member's sort of a little bit different than the next. But it's an area too. I think we will try and use our experience over the next few months to try and improve our guidance around this too. I think the Good Practice Toolkit can probably help with it, do with a bit of improvement as well to show better set out what we expect for different, I suppose, different categories and just different sizes of members, and that's a bit of feedback that's coming back loud and clear over the last couple of months. So we've got a bit of work here in ACFID to do around that. And as I say, the experience we'll have over with the reporting that's just come in for the end of June, and that you guys will be sending in probably for the end of December, that'll help us a lot, I think, in shaping things for the future. So we're learning probably just as much as you will be through this process. Look, there's a bunch of other slides here, which I won't, given the time, I'm not really going to go through, apart from just draw your attention to the fact that there are some other sort of financial related compliance indicators in the quality assurance framework to the code of conduct that you might need to be aware of, and these are a lot around about just effective use and resources, about having measurements of financial performance and financial position, due diligence around partnerships, some more good practice indicators around all those. But I'll let you look at those in your leisure. I think I won't, due to time pressures, I won't dwell on those. I would like to just refer you once again to the Good Practice Toolkit that accompanies the Code of Conduct, particularly 8.3, which covers the financial annual reporting and all that stuff we're talking about around fundraising and ratios. Particularly, I'd point you to the ACFID Mandatory Financial Guidance, which will cover a lot of the material we just covered then. maybe in a little bit more detail. And also, I've got a bit of an annual reporting checklist up there, which hopefully provides some tips and a bit of a checklist to make sure you cover everything off, and the various reporting templates as well. And we've just, as I mentioned, we've just added in that resources sections and Q&As just around some of the more technical questions that have come up probably over the last few months, particularly around the application of the financial definitions. So they've just gone up as well yesterday. Also, the toolkit, if you are involved in that financial wrongdoing, there's under 8.2, there's some further guidance and resources there as well. And that's an area that we'll be working on over the probably hopefully over the next 6 months, and also over the next year or two, I'd imagine, to further enhance. That's us, that's our team, that's what we look like, if only. So yes, basically you can get us on that number, and really the best way to get in touch with us is through the code inbox. Someone will be monitoring that, if not every day, most days, and Sophie and myself are part-time, so there's normally one of us around, although Sophie's only partly part-time, I think, on the code. So yeah, it should be one of us there to monitor that on a daily basis. And I think that's about all I've got to say. Not too sure if there's any questions. Yes, we've got one. Oops.
Okay, looks like we've got a couple of questions. We're just going to scroll up, and I think Marilyn's is the first. So Paul, if you just
can you please send a copy of the presentation? So we can do that. That won't be a problem. We'll get that out. And Beth has given me the thumbs up on that one. So I'm just trying to look at the next one from Anna Rose. Regards to impact reporting, any project lasting longer than 6 months would have to begin with a relatively small window in the year. Activities. Sorry, I'm just jumping around a bit on this window to be able to get the whole thing. Those in the accurate. Putting an impact to be reported within the same CSA period. Yeah, I think it's really just doing what you can at the life of the project. But look, I appreciate in new projects, you might only be able to report on inputs on things that you've done during that year, which may only be set up stuff or some pretty basic, we drilled 2 wells and that's as far as we've got. We don't know what the impacts are yet. So that's fine. But I think, just keep in mind that whole longer chain, probably over time, about how that work manifests itself and impacts in the longer term, I suppose. And also, I suppose, just for those ones that are fairly new, you could probably still link them back to, I suppose, your higher level objectives, strategic objectives. How's that work linking through to your more strategic goals? How's it contributing? At this stage, it might only be at an activity level, but you could say, I suppose, we drilled a few wells, and that's with the view of eventually improving the health outcomes of people in this area of wherever it may be, or something like that, by example. So yeah, there's a bit of horses for courses, and I know it won't be the same for everybody. And I was probably painting a bit of the perfect scenario. Next one.
I think that's about all the questions we've got so far. If anyone else had any other questions, we might wrap up there. As Paul said, the webinar will be available, this recording will be available in 7 to 10 days. It would be fantastic if you guys could stay online and complete our post-webinar survey. We'd love any feedback that you've got. But in the meantime, thank you so much for your attendance today. Big thanks to Paul, and we'll catch you guys next time.
No, thank you very much. And if you think of any questions that come out of today or whatever, yeah, just get hold of us at the code inbox. Probably would be the best bet.
Awesome. All right. Thanks, guys. Have a great day.
Thanks very much. Goodbye.